welcome to the stage His Excellency Mansoor Ebrahim Al-Mahmoud, CEO of the Qatar Investment Authority, Bruce Flatt, CEO of Brookfield, Jenny Johnson, President and CEO of Franklin Templeton, and Zhang Lei, Founder, Chairman, and CEO of Hillhouse Investments, for a conversation with Bloomberg's Francine Lacqua.
Hi, everyone, and thank you, first of all, to my wonderful panel for being here today. We're going to talk about some of the trends and actually what you need to do to invest for the next generation. Now, the increasingly hopeful economic story of 2024 is also that of a world headed for a soft landing, but the same world is becoming more dangerous, divided, indebted, unequal. So we'll try and unpack some of the main trends and what it means for some of your investments going forward. So, Your Excellency, can you maybe get us started with a couple of minutes of, the big mega trends? So we know about AI, we know about digitalization, decarbonization, but actually what's also changed in the last 12 months?
Normally we engage with this sort of discussion internally with our partner, with the expert in the industries. I think we are focusing on 5 main themes or trends. One of them, again, digitalization and AI. And as you know, all economies is going into digitalization, and widely accepted that this is a mega trend that will impact all economies. 2, climate change, which has been, a trendy investment type and theme for all of the investment. Also, I think the growing of the middle class people during the last cycle, a lot of wealth has been accumulated. And this is, I think, a big theme that would impact maybe tourism and consumers. Fourth is the health awareness, especially after the pandemic. There is 2 aspects of it. I mean, people are looking after their health, and government after the pandemic has found themselves that they have not invested in healthcare. So this is, and lastly is the geopolitical aspect and the supply, chain changes. All these themes, I think it will continue for a while. And I think economies will be spending, and policymakers will be, focusing on these themes.
Thank you so much. Bruce Flatt, what do you see as these mega trends?
Look, I think I'd agree with His Excellency's comments. I'd just say that the trends of decarbonization, deglobalization, digitalization have all probably increased almost exponentially over the last while, especially with the contribution of AI. Look, cloud computing was taking very significant amounts of renewables and data centers capacity 12 months ago, 18 months ago, but it's now taking enormous amounts of capacity. But maybe even the other shift that's happened is that we were in a world 18 months ago where the banks had seized up because interest rates were going up and a lot of money was lost on treasury bonds in the banks. That has abated and capital markets are coming back. So globally, you can now see the markets lifting, transaction activity coming back, and that's a lot different than it was 18 months ago.
Jenny Johnson?
Yeah, so Bruce always talks about his 3 Ds. You mentioned them. I added the 2 other, which were demographics and disinflation. But I think that's been the big change, which, starting in 24, is it going to be 6 cuts from the Fed? Is it going to be 2 cuts? Is it going to be a soft landing? Is it going to be a crash landing? And now there are actually people who talk about whether there would be a Fed increase. Now, I don't think that's the case because I think Powell kind of came out and tried to quiet that. But there's a whole different view, I think, on how long, how difficult it is to tame the inflation. And whether we get 1 cut or 0 cuts or some number. I don't think anybody was thinking that last year.
Zhang Lei?
Yeah, sure. I would say biggest change has been the last 12 months. We have seen traditional corporations adopting technology in a massive way. ChatGPT is as much as a great product in terms of technology, but also as a sort of education campaign or corporate enlightenment, if you will, that actually push every single corporation, traditional businesses that we own, have to think about how technology changes their business models. I'm really happy to see that traditional businesses now leveraging technology to make it better instead of just the digital gap that we saw in the mobile internet.
And can I ask all of you, is this a good time actually to invest? I know some of you have things in the pipeline. I know you're a longer term investor. Bruce, you've been very acquisitive. Is it ripe actually for acquisitions and consolidation?
So we're in the business of buying things and selling them. So it's always a good time to be buying and selling. But look, I would say when capital is less available in the world, it means there are greater opportunities to put money to work, and odds favor returns being higher when you do it. Coming up, we've passed the bottom of the cycle for PE businesses and real estate and infrastructure. And as a result of that, money put to work in the next 24 months, it will be an excellent time to invest. So the markets are just opening up today. And what that means is that whatever you're doing now will probably be pretty good investments.
Is infrastructure a crowded space? I mean, you were one of the first ones, and now you're seeing more players actually enter that space.
The infrastructure is among the largest businesses in the world. It's the backbone of what everything runs on. And that is, it's just, the amount of money that's out there for infrastructure is large, but the need is far, far, far larger. The amounts of money are, I'll say, hundreds of trillions for the things that need to get built over the next 25 years, and there almost isn't enough money to do it. So it's definitely not a crowded space because the needs are so large.
I think it is not crowded. I agree with Bruce. Infrastructure is becoming very important for two reasons. Government trying to get the private sectors involved, whether for more efficiency or for selling and paying some of their debt. So we're seeing that most of the government having their agenda to really sell some of their assets and get the private sector involved in their infrastructure project.
Private credit is also the hot new topic. Questions about valuations, actually, over the last couple of days because of rising interest rates so fast. Can you give us a little bit of a perspective on what private credit in Asia is looking like?
Yeah, I think it's really exciting for private credit in Asia because by and large, the traditional corporates in Asia, they have much lower leverage than their US and Western sort of counterparts, and they actually much more into what I call the real economy. So the businesses, the traditional businesses, from department store operator to a manufacturer. So that if you have a good research and sector knowledge, if you can structure it well, I think it's a really amazing opportunity to invest in private credit in Asia.
Do you have anything in the pipeline right now? Is there a very clear pipeline?
Yeah, absolutely. We have probably, I would say, private credit has been we have been most active in this asset class in the last few months, and we continue to see strong pipeline across multiple areas, from healthcare to consumer goods to manufacturing to business services as well.
Jenny?
Yeah, no, I agree, and I think there's a lot of discussion about is there too much money in private credit, and it's not regulated, and is that a concern? And I think the reality is it's just shifted. The credit has just shifted from banks' balance sheets, particularly in the U.S., into the private credit market. In a lot of ways, that can be a better structure because people invest in locked-up capital and vehicles, and you don't have the potential. If you have defaults, you don't have the domino effect of a bank being a counterparty, and arguably in the U.S. also having the government who guarantees a portion of it. So, I mean, I just read something like in the small and mid-size direct loan market, it has dropped from 70% of banks to 11% of banks, and the rest is being filled by private credit. So I think it's a great place to be. And honestly, You know, if you look at, for the illiquidity premium, if you could withstand it, you're talking cash at 5%, you know, high yield, 7.5%, 8%. High yield is almost priced for perfection in the public markets. And then private credit closer to 12%. That's a pretty good return.
Longer term, Your Excellency, when you look at some of the big challenges, how do you deal with AI right now? I mean, we're talking about investing in the next generation. So you're taking decisions now for something which is still quite difficult to read.
We have, I think we have to admit the fact that AI is still a new technology. When you draw the spectrum of the AI, you see some of the aspects are very clear. It has a business model, like, for example, the data center, the chips, and so on. And then when we go into the quantum computing, and then the data organization with their labeling, categorization, and then into the software and application, all these are, you know, we are investing in a smaller basis in all of these, but still, if you ask me, what is the big winner of this? I don't know. And, you know, when you remember in the internet, during, you know, in the 90s, when the search engines came to the surface, a lot of the names are not existing right now. I remember Alta Vista and so on and so. So I think there will be a lot of changes. It is not clear where is the big win in AI. But the good aspect of the AI technology is that all of the stakeholders are in agreement to invest more into the space. So you have investors like us, you have the policymakers are keen to attract businesses and investment into this space. And you have also companies who have the know-how, like Microsoft and so. And you know, in technologies, things is moving very fast, and it is accelerating. So it's still not 100% clear what is the big one.
Can I ask you about your strategy of it? How do you find the perfect time to deploy actually cash?
We are deploying. We are investing. We are continuing investing in the space. But then we make sure that we have a very diversified portfolio into the space. Yeah. So we are in full speed in terms of investing in data center. We are in full speed in investing in data, you know, categorization. We are in full speed in investing in software and application that have a feature of the AI. Yeah. And we are a big player in the chip maker company. So we are investing and we are not stopping. But I'm saying that still
early.
Yeah, the big win still is not very clear for most of the investors.
Brookfield did this mega deal. Can I call it mega deal with Microsoft? I mean, it's a big deal. Is this a template of future deals, of how you structure them?
Yeah, so the deal we did with Microsoft is a framework deal where we're going to build them 10,500 megawatts, 10 gigawatts of power over the next 5 years. And that will essentially be a framework for other things we do with them in the future. And that's about an investment about $10 or $12 billion. And what's really important to understand today, because everyone thinks about renewables and is it in a bubble, but the important thing to know is that in most countries of the world, the cheapest cost of bulk electricity is solar or wind. And that's dramatically changed from 10 years ago. The cost curves have come down, manufacturing costs have come down, and as a result of that, there's going to be, over the next 20 years, a very, very significant build-out of renewables in the tens of trillions, and that will decarbonize the world. And the technology companies are leading the way because they've all committed to net zero, Microsoft being one of the leading ones, and this is a part of it. But I think it will be the biggest thing today for them to find is credible parties with projects that can build them out and meet their supply. And so we're continuing to do that around the world with great companies like them.
And Jane Johnson, where are you finding the deal? So how do you want to grow Franklin Templeton?
Well, first of all, you asked the question earlier about is it a good time to invest in the market and what is His Excellency doing with his cash? And John Templeton said the best time to be in the market is when you have money. So, and it's because you can find opportunities, anything. So whether it's AI, and I agree with you, I mean, I think the initial AI types of things are picks and shovels, right? It's the chip makers, it's the Microsofts, who are running cloud computing. But the next phase is going to be as companies, and they'll start to differentiate within their own businesses, those who are actually using it to a competitive advantage. And it's hard to see that today, and it takes a while to do that. But I think based on the trends, it's always easier to swim with the current, right? So if your trends, and we talked about the Ds of deglobalization, so it's figuring out who are going to be the beneficiaries of that. In this region, I mean, one of the things that I think is so impressive, obviously, as oil stays high, and it doesn't look like there's any quick resolution to Russia and Ukraine, so it's likely to stay high. There's a mentality of multiple generations, which is something I very much appreciate, and a desire to diversify an economy. And so the various economies, and so you find investment opportunities as there's diversification, and so making sure that you're close, and part of those conversations is where you find investment opportunities.
Absolutely. If I could add what Jenny said, the settings for investment. Right now, we are, in a very dynamic environment. You could say, whether you worry about interest rates, whether economic uncertainties or geopolitics, seems a lot going on. But we have observed that actually the best companies are built in the time of uncertainties. And the best businesses are actually gaining tremendous market share in economic uncertainties. So we've seen, give you some examples. I talked about traditional companies leveraging technology. One of our portfolio company is one of the largest lady footwear retailer. That they are adopting technology to make the supply chain much more robust, much more nimble, and faster replacement cycles. And they are adopting technology to train their employees, so that every employee have a kind of small app that they can train them just flipping page like TikTok, so that every training is breaking down. So that I've seen that companies take advantage of this kind of economic uncertainty, invest in technology, leverage technology to do it better. We had another company, it's traditional business, a mattress company, one of the premium mattress company that in China that had difficulties, during the real estate bubble burst and during the, the quarantine of COVID lockdown, that they would have the amazing slogan in the TikTok, basically saying that if you ever got, quarantine with our mattress. So that's really doing very well. They're leveraging technology, access customers, access supply chain in a faster, efficient way.
Zhang Lei, what's your investment strategy looking like? So is it still, what's your take on China and fragmentation?
Right.
Is this temporary, or are you looking to tilt towards a more pan-Asia investment strategy?
Well, Hillhouse had always been a pan-Asia investor, but what we're seeing in China, that's interesting opportunities actually coming from the winning the losers game. You're seeing companies not long-term enough, not consistent, have really steady hands actually losing shares. I think what you do is very basic. You just have a long-term mentality, be very consistent, invest in traditional businesses that can leverage technology to be better. I think that's enormous. I'm seeing same thing happening in other parts of Asia that do the same thing. That people are investing for the long term. Have the steady hands. It's almost like this tennis, right? That you're it's not necessarily the most powerful players win. It's that just avoid enforced errors, have steady hands. Over long run, you're gonna have a better chance.
Well, Lee and I were talking earlier about China and the opportunities of investing there, and you always get asked the question as an American business, how do you feel about China? What are you going to do? And the answer is it's the second largest economy in the world, and often when people, it's about figuring out those trends again, and within China where there's a desire to build a domestic market, and again, a lot of the competition has gone away, that you do find opportunities. It's sort of gone through a lot of its pain with the real estate resetting and other things, and figuring out where those are, I think is good.
You know, I would just say, Francine, that there are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Yeah, the prices in China is becoming very attractive, and we have an allocation for China that we continue investing, but we are focusing in consumer-related businesses. And you know, China has a huge population, and the middle class is growing in that space. So we are focusing on that space more than any other sectors.
When we talk about fragmentation and deglobalization, are we underestimating or overestimating actually these new alliances for trade, and therefore what that means for investment?
I think we are. I think this is a big risk for the business environment in general. I think two risks that we always worry about: this deglobalization and the mindset change. We have been working in terms of globalization. Businesses were built to fulfill the globalization. Now we are shifting 180-degree opposite the direction. And definitely this will have a great impact. And this is also, when you think about the policies that would be related to this, the localization I know there are some opportunities in terms of localization and supply chain, but I think the big shift in the mindset of the policymakers, definitely this is a big risk.
Do you see that as well, permeating through everything?
We call it deglobalization because it fit with the Ds.
Right.
But really I would characterize it as a reindustrialization, and new supply is getting built in different places, as opposed to it all getting built in China. If it's low-end goods, it's getting built in India, Vietnam, Philippines, or somewhere else. If it's high-end, like we're helping fund half of the new fabrication plant for Intel's chips in Arizona. So if it's high-end, sophisticated production chips, technology-wise, it's going to go back to countries where it's really important that those chips are there. So I think it all depends, but what it just means, again, back to infrastructure, there is a massive build-out of capacity, and that brings some form of inflation to the world, but it's good inflation, and it's offset with productivity improvements of AI. And what that means is actually highly, highly productive to the investment world and to the global economies. So it's good for GDP growth, and it's highly productive. So I'm actually, this period of time that we're going into is a really exciting investment period, as long as people forget about the noise right now. And I don't want to make light of the noise right now, but when you're investing, it's really important to focus on the long term.
What about the noise that actually changes policies? How do you navigate something like the U.S. election?
So look, I would just, from our perspective, we're in 35 countries. We pick them very specifically. We pick them where there's culture of respect to capital. We can operate with standards we operate with. They're large enough we can run a business and stay there and invest for the long term and don't leave. And the United States is an amazing country. No matter who gets elected, doesn't matter. There may be foreign policy decisions that are made for some other countries that will matter, But for investing in the United States, it does not matter at all who gets elected to be the president of the United States.
Jenny, again, how do you make a difference? You know, the strength of the U.S. economy is also incredible thanks to the onshoring, right? So sometimes, thanks to the onshoring, bringing back a lot of manufacturing to the U.S. has really kicked, you know, it's incredible actually the kind of growth we're seeing from the U.S.
Well, I think Bruce said it exactly right, which is you're having this restructuring of supply chains. And in cases where, for example, in chips, high end, right, U.S. wants to have some of that come back because they feel like they're vulnerable by not. There's a friend-shoring component. That's why you see investments in Japan. But, you know, businesses act rationally. One of the things I learned when I was in Hong Kong is there are a lot of Chinese companies that are moving the final step of manufacturing their goods to Malaysia, Indonesia, Vietnam, so that they can meet the WTO requirements to say stamped, you know, made in Vietnam, so that it bypasses the U.S. tariffs on China. All of those things, now they're inflationary. Whether or not AI is going to be enough to, as far as productivity gains in the short run, to offset that, it'll take some time. But you know, there's no question that also opens up investment opportunities as you're following those trends.
Okay, I'm going to put you all to work because we have 30 seconds each. If I give you, let's say, $10 million to invest for the next generation, where do you put the money right now?
Well, put in Asia. I think that's a growth engine. That's for the future. And also put in actually traditional companies that can leverage technology to improve their productivity.
With Hillhouse.
10 million? Jenny, where would you put it?
I mean, 10 million, and it's for the next generation.
Yeah.
I mean, you got 1 billion people entering the middle class in Asia. You know, most of them in Asia, that's a good spot. But I think technology is going to be the place I'd go for a long-term investment.
We just buy backbone infrastructure and compound it 15 or so for 25 years, and great wealth is made by compounding.
I will put it in a credit right now. Credit is a very safe play.
Thank you so much for a wonderful panel. Thank you so much for joining us. Thank you.